Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, our morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now. Last night was the day after the Federal Reserve and the Treasury intervened to save Fannie May and Freddie Mac, the huge US mortgage providers. Initial enthusiasm about the rescue quickly drained away though, and the Fed's shock move has simply fueled fears about regional banks and what sort of toxic debt they've got sitting on their balance sheets because of the US housing collapse. National City and Washington Mutual, two regional banks there, their shares fell 25% overnight. And also in the West, lines formed outside the banks of IndyMac. This is the bank that was taken over by federal authorities on Friday. Again, another victim of the mortgage collapse and the housing crisis there in the United States. Now, later last night, Freddie Mac's $3 billion bond issue went over okay though, and that was a nervous time. Remember, this was the thing that the federal authorities were particularly worried about, that this bond issue would not go over okay. Well, it did, but still there's enormous nerves there in the US financial markets. Back closer to home, today we're expecting the inflation figures to come out for the June quarter. Most people in the market expecting 1.4% rise for the quarter, June quarter from the March quarter, and for the year, 3.8%. Again, that's outside the Reserve Bank's 1 to 3% target band. Key figure to find out what our Reserve Bank will do next week when it potentially changes the official cash rate. I'm Bernard Hickey, that was 90 at 9 for interest.co.nz.